Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 13th of June 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. I think we can characterise yesterday's session and the overnight session by what didn't happen rather than what did. And what I mean by that is, obviously we saw some quite historic events in Singapore yesterday, but you'd be forgiven for thinking that that hadn't happened if we look at some of the region's currencies. The dollar gaining against the Japanese yen, virtually static against the Chinese yuan, and making modest gains, 0.53% against the Korean won. And what we might have expected to see there is some of these Asian currencies on the front foot in the hopes of a peace dividend with North Korea, but that wasn't forthcoming, and so the market appears to be nonplussed about events in Singapore yesterday. Right, what's on the calendar then? Events that may move the markets today. Be aware that we have an ongoing meeting of the Eurogroup, European Ministers meeting, and they obviously will have plenty to discuss after Tuesday's summit and the weekend's events at the G7. We've also had consumer confidence data for June out of Australia, and more on that a little bit later on in the video. And staying in Australia, we've had a speech from Reserve Bank of Australia's Governor Philip Lowe to boot. Data to come at 7:15 GMT. We'll have Swiss industrial production for the fourth quarter. Then at 8:30 we'll have a raft of inflation data out of the UK, including retail price index, producer price index, and consumer price index data for May. Very important, obviously, this coming hard on the heels of the wage and employment data we saw yesterday. At 9 AM we will have industrial production for the Eurozone for April. Of course, we've seen weaker numbers out of Germany, so it will be interesting to see if the Eurozone data reflects that pattern. 12:30 then we'll have producer price index data out of the States, ex-food and energy, this data year on year and for the month of May. And then at 1800, the meat on the bones, the main event, the FOMC meeting and the decision on US interest rates, including a speech by the Chair Jerome Powell and a press conference at 18:30. Market expectations obviously for a rise, but I guess it's more about the timing and frequency of rate rises to come that will be of interest to the market. Breaking news and comment then that's caught my eye overnight. First of all, Japan has proposed new immigration rules to allow temporary workers into the country to ease labour shortages. Immigration in Japan is something of a taboo, but the population is dwindling and so the country needs guest workers if it is to continue to prosper. Australian consumer sentiment has rebounded in June, rising by 0.3% versus the prior month's minus 0.6% fall. And the Westpac survey also revealed an improving outlook for family finances, which is a key factor in the RBA's interest rates policy decision. So some positive news there from consumer sentiment in Oz, and that sort of conflicts with the negative outlook that we saw from businesses earlier in the week. Meanwhile, in Singapore, the Q1 jobless rate has fallen to a 2%, a two-year low, and there are now more jobs than job seekers for the first time since 2016 in the city-state. Right, food for thought, something to take away with you into the trading day and beyond. And why not think about this? As we've already said, the US Federal Reserve will meet today to decide on US interest rates, and the market's expectation is for a 0.25% rise. Higher interest rates may benefit savers, but dearer borrowing costs will weigh on debtors. And the chart opposite shows us the nations with the highest levels of outstanding debt, and these are characterised by the percentage of world debt per nation. And the United States here, Japan, Italy, China, etc. So well worth studying that data. It's colour coded as well. The nearer you get to the yellow end of the spectrum, the higher the level of debt in that particular country. Right, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. Thank you for your time.